for all the reasons we've been talking about, I'm still cautious on the market overall. But I just think that the things are getting a little bit washed out with the big cap tech names, the mega cap tech names. I do think also that this whole thing with the tariff issue, Canada, Mexico has already said that they're going to go ahead and join the U.S. with the tariffs on China. My feeling is that Canada will do the same thing by tomorrow. If they do that and tweak a little things on the border issue, I think there's a good chance that they'll postpone those tariffs again, and not on China, but on Canada and Mexico. If that happens, that could be something that will give us a nice little relief rally as well when you got Bitcoin finally bouncing back, et cetera. This is only a short-term play, but I do think people need to be careful about making negative bets right here over the next few days. I don't think that Trump is going to always postpone tariffs, because at some point you've got to you say they use the carrot or the stick. You've got to actually use the stick.
Right.
And I think they will. I just don't know that it'll happen this week with what's going on in the marketplace.
Yeah, that's a really good point, Matt. If you're going to keep posturing and using this for negotiation purposes, you really need to show that it has teeth. It can't just be an act the entire time. Really good stuff there, by the way. One of the other questions, one of the things that we've been kind of talking about here on our show is in terms of a move down in the broader market here. We did, of course, test a 5% pullback from the highs last week. We did that right at the end. We bounced pretty successfully on Friday. My question to you is, do you think 5% is enough, or do you really think we need to kind of shake out some more weak hands here, maybe reset some of the valuations and some of the frothiness here? What do you think? Is 5% good, or do we need some more downside?
No, I definitely think we need more downside. Again, it may not, and I'm thinking probably won't come immediately, but and I couldn't believe some of the narrative. People saying, "You think everything's washed out?" Washed out. We're less than, we're not even 5% from an all-time high, not just down from an all-time high. Market's still trading at 22, depending on how you measure it. Leon Cooperman was on this morning saying at his reading, he thinks it's 23 times earnings. But either way, you're at 22, 23 times earnings, more than 3 times sales. That doesn't wash out anything. And this whole talk about the broadening out of the market, broadening out of earnings, they're getting a little bit better for the S&P 493, but not much at all. They're actually getting worse for the overall S&P. And all of this broadening out of the market is just causing it to go sideways. And like we've talked about, the market can go sideways as long as the tech stocks hold up. And they're not holding up anymore. They're starting to roll over. And we got more evidence last week that the AI market is going to be as profitable as the market has been pricing in. And the price has been pricing in a huge, again, it's going to be profitable and it's going to change the world, but it's way overpriced, I believe. And I think that's starting to show up. When you combine that with the slower growth in the economy, what we're seeing in housing and the consumer, and it just makes it hard for an overpriced stock market, expensive stock market, to hold up. So I think we're going to see at least a 10% correction before long again. I think today's dip will bounce back on a near-term basis, but I do think the situation has changed from buying the dips to selling the rallies. And I want to be, I'm not buying this dip maybe for a very short-term trade, but after that, any kind of rally, I think will be a good opportunity to take some more chips off the table and get more defensive.
Matt, that's music to my ears. I have been saying all morning and into last week that it's clearly the sentiment has changed here, right? We were buying dips. Now we're selling rallies. You said the same thing here. Real quick, one of the other things I was mentioning yesterday, I'm not sure if you know Kenny Polcari, one of the market makers from the New York Stock Exchange. He was saying last week, in the midst of all of this, saying, folks, a 6% pullback is normal trading action. So to your point about stuff being washed out, like this is not even a correction. This is normal trading action. Let's see what happens if we come down to that 10% level.
Even in the best years of stock market. Now, I think most people agree we're not going to have another up 25% year. Maybe we will, but 2 years in a row up 25% or so. Even in years like that, you usually get a correction. We didn't get one last year, but we did the year before. And so even in really great years, if things are starting to slow down, you should be expecting it, I guess is my point.